Hello. It's just your boy Flo here. Got something to share. Dub knowledge, of course. Yeah. That's a little bit too slow. So just like Wreck-It Ralph, we're gonna go turbo. That's where I went, TurboTax, and stumbled upon a great article that they published about what you can do to boost your tax refund. Everybody want to try to get some more money. You know, worked hard for your money. They take your money, and you don't get all the money back that they done took from you. What? You might have the wrong tax person too. But anyway, let's get into it. So 5 ways that they talked about in which you can boost your tax return. So number 1, rethink your tax filing status. Just because you're married does not mean you need to file jointly. It don't. You ain't gonna go to jail if you file not jointly. There's other options that are clearly out there. Just that simple. Let's take a look at what it is, what your earnings are, and let's see what makes the most sense. Gotta see, because if you come in together and you making over $400,000, child tax credit, bye-bye. But if one of you guys filing separate, then at least you got something coming to the household. Just gonna be straight up front with you. So rethink your filing status, talk to your tax accountant, tax lawyer, your tax preparer, whoever it is. Have a discussion with them. Let's break it down. Let's see, let's talk, and let's see what's gonna make the most sense for you. What's gonna be advantageous when it comes to you filing your return. There we go. Number 2, I want you to be like Winnie the Pooh and just wrap your arms around someone. Give them a big old hug. Feels so good. Tax deductions. Oh my gosh. Yes, just let it serenade. Let it fill your spirit up, because those are your best friends. Just that point, just that simple. Those are your best friends. Embrace those tax deductions. The more you can use, the more fun you're gonna have. You got your sales tax, you got reinvested dividends, you got out-of-pocket charitable donations, you got student loan interest, you got child and dependent care expenses, you got the earned income tax credit. What else they say? You got the state income paid from your last year's return. You got jury duty fees. You got medical expenses. You got charity miles, medical miles. Yeah, the list goes on and on and on. You got Schedule C. There's a whole bunch. There's many opportunities to where you can tally that thing on up, and let's hopefully, otherwise it don't make no sense. It beats the standard deduction. Maximize your IRA and HSA, which is a health savings account contribution. Maximize those things. Get as much as you can to put over there, because that's a deduction. Those are deductions as well. So maximize that. It's a deduction for you, and it's a great preparation for when you retire. You got pockets of money that are stashed away that you can draw from tax-free or not. Number 4, timing is everything. It is everything. That calendar, having the conversations, staying in touch with your circle of financial people, all the way from your banker, all the way on down to your tax preparer, your wealth manager, your daily money manager, your financial coach, your bookkeeper, your CPA, all of them. Timing is important. Whoever you're talking to. For example, they say TurboTax. If you can, make January's mortgage payment before December 31st and get the added interest for your mortgage interest deduction. Boom. Schedule health-related treatments and exams in the last quarter of the year to boost your medical expense deduction. If you're self-employed, look at any purchases you'll need to make that can qualify for deductions. Buy things like office equipment, software, devices, whatever it may be, so that way you can boost your potential refund, because that's a deduction. So if you're able to claim your home office deduction, you can even deduct the cost of painting your home office if you want to start the new year with a fresh look in your workplace. And of course, there are other options that we can go through. I'm not going through, trying to keep this video short. So timing is everything. That last quarter better be a expenditure quarter. Just run that thing up so you can get that money back in February or after February if you are using the CTC or the Earned Income Credit, Child Tax Credit. Next thing is, have your eyes and your ears open. Become tax credit savvy. So make sure you're having a conversation, know what they're doing, know what they're filing, understanding what the credits are. So that way you know what it is that you need to do. Do you understand the credits? That means you understand the deduction, because the deduction is what gave you the credit. So have that conversation, do your research, get your knowledge up, get your game up, and that's what TurboTax say. That's what they say. Just like that.